Hi, good afternoon, everyone. Today we'll discuss Ind AS 36 impairment of assets. The objective of this standard is the procedures that the entity applies that assets are carried at no more than their recoverable amount. Requirements of recognition of impairment loss when an asset is carried at more than its recoverable amount, when an entity should reverse the impairment loss and disclosures. Scope: this standard shall apply to impairment of all assets except inventories, Ind AS 2, contract assets and assets from the cost of obtaining or fulfill a contract that are recognized as per Ind AS 115, revenue from contract with customers, uh, deferred tax assets, Ind AS 12, income taxes, assets arising from employee benefits, Ind AS 19, financial assets within the scope of Ind AS 109. Biological assets related to agricultural activity Ind AS 41, insurance contract Ind AS 104, NCA HFS Ind AS 105. It, this Ind AS 36 applies to Ind AS 16 PPE, Ind AS 38 intangible, Ind AS 40 investment property, Ind AS 116 ROU asset, investment in JVs, associates and subsidiaries if valued at cost. Impairment formula: three things: carrying value, fair value less cost to sell, and value in use. Recoverable value is higher of 2 or 3, that is, fair value less cost to sell or value in use. Impairment loss is carrying value is greater than recoverable value, that is, 1 is greater than higher of 2 or 3. So that is impairment. Impairment at CGU or individual assets. Impairment is at the CGU level. Once allocated to the CGU, it shall be with the same CGU. CGU is a cash generating unit. It is a group of assets that generate revenue which are independent. CGU cannot be greater than the segment. Example: which of the following statements are true for Ind 36 impairment of assets? Not applicable to inventories, not applicable to financial assets classified as subsidiaries, associates, and joint ventures, not applicable to assets arising from employee benefits, applicable to financial assets other than subsidiaries, associates, and JVs. Answer is 1 and 3. Not applicable to inventories and not applicable to assets arising from employee benefits. Example: the carrying value is 16 crore and the borrowing cost included in the same as per Ind AS 3023 is 2 crore. The fair value less cost to sell is 11.95 crore and value in use is 10 crore. What is the impairment loss? 5 lakh, no impairment loss, none of the above. Answer: carrying value is 12 crores, recoverable amount is 11.95 crores, impairment losses 5 lakhs. Identify the scenario in which the impairment loss needs to be recognized. Assets, carrying value, fair value less cost to sell, value in use, impairment loss. So, asset is inventory, carrying value is 100, and fair value less cost to sell is 80. There is no impairment loss because impairment does not apply to inventories. Building, carrying value is 1000, fair value less cost to sell is 1500. There is no impairment loss as the fair value less cost to sell is higher than the carrying value. Machinery, the carrying value is 500, fair value less cost to sell is 400, value in use is 450. Higher of the two, 400 and 450 is the recoverable value. So 450 is the recoverable value, and impairment loss is 500 minus 450. 50 is the impairment loss. Software, 2000, 1900 is the fair value less cost to sell. Value in use is 2100. Higher of the two, 2100 is the recoverable value. There is no impairment loss as carrying value is lesser than the recoverable value. Plan assets, 1500, carrying value of fair value less cost to sell is 1200, value in use is 0. There's no impairment loss as it does not apply to plan assets. Impairment loss does not apply to planned assets. Investment property, 1000, fair value less cost to sell is 2000, and value in use is 0. There is no impairment loss as investment property is valued at cost. Steps for impairment testing. Uh, Identify the level at which the impairment testing is to be done at CGU level or individual level. When to do the impairment testing. Determine the recoverable value of the individual assets or CGU. Determine the carrying value of individual assets or CGU. Impairment loss. Carrying value is greater than recoverable value. Impairment testing of goodwill and CGUs. Reversal of impairment loss recognized and disclosure. uh, whether at individual assets or CGU, whether to do the impairment testing at the individual level or CGU. Corporate building due to regulation got demolished. Can we impair the same? Answer. We have to compute the value in use. The value in use cannot be computed at the individual asset level. Hence, it has to be first allocated to the CGU and then impaired. A machine is used with a big industrial machine. If there is breakdown in the machine, can it be impaired? Answer. The value in use is to be determined for the CG at the CGU level. Hence, the impairment loss has to be determined at the CGU level. A machine produces goods and sells in the market. Then, can it be impaired at the asset level? Answer. Since the value in use is determinable, it can be impaired at an asset level. Example, there is a mining entity and it owns a private railway station to support its mining activities. The private railway station could be sold only for its scrap value and it does not generate cash flows that are independent of mining activity. Can it be impaired? Answer, it is not possible to determine the value and use of the private railway station. Hence, it is to be impaired at a CGU level, that is the mine. Example, store R belongs to retail stores of G. Store R makes all its retail purchases through G's purchasing center. Pricing, marketing, advertising, and human resources policies are decided by R. G owns stores in other states. All stores are managed by R. R and other stores were purchased 3 years ago, and the goodwill was recognized. What is the CGU? Answer. Store R are generating cash flows that are independent of store G. Hence, store R is a CGU. Example, a significant product of plant Y is the intermediate product of plant X. 80% of final product of plant Y is sold to external customers. 60% of plant X production is sold to plant Y, and 40% is sold to external customers. For the following cases, determine the CGU. A. X could sell the sell the product it sells to Y in an active market. There is no active market of product X sells to Y. Answer: in one, X is a CGU and Y is a CGU as they have independent cash flows. If there is no active market of product X sells to Y, then Y is a CGU. When to do the impairment testing? Assets other than goodwill, intangible with indefinite life and under development when impairment indicators uh, exist, testing to be done at the reporting date. Assets other than goodwill and intangible assets with indefinite life and under development is to be tested for impairment when impairment indicators exist and testing to be done at the reporting date. Goodwill, intangible assets with indefinite life and under development, anytime, irrespective of the fact that the impairment indicators exist, testing to be done at any time during the financial year, provided it is done at the same time annually. Indicators of impairment testing: external indicators and internal indicators. External indicators: significant decline in the market value of the asset, adverse technology market or legal environment, increase in market interest rates and which affects the discount rate of VIU. Carrying value is more than market capitalization. Internal indicators: obsolescence, physical damage, asset becoming idle or plans to discontinue, plans to dispose of the asset, reassessing the indefinite life to definite life, economic performance of the asset would be worse than projected. Example, the impairment of goodwill allocated to the CGU would be done only when there is an indicator of impairment. True, uh, or false. The answer is false. The impairment of goodwill allocated to CGU would be done at any time, whether the fact impairment indicators exist or not. The goodwill, intangible assets under development or intangible assets with indefinite life would be tested for impairment uh, only on the reporting date and not in the interim period during the financial year. The answer is false. Uh, since they are to be tested at impairment irrespective of the fact whether the impairment indicators exist, and they are to be tested at the impairment at the same time during the financial year. Example, which of the following assets or the CGU would be tested for impairment only when there is an indicator of impairment? Items of PPE, CGU to which goodwill is allocated, CGU to which goodwill is not allocated, CGU to which intangible assets and development and intangible assets with indefinite life are allocated. Answer is 1 and 3. Items of PPE and CGU to which goodwill is not allocated. Example, how to compute cost to sell. Cost of removing the asset 3,000, legal fees 5,000, reorganization cost 10,000, termination benefits 20,000, documenting stamp tax 2,000. Answer, cost of removing the asset is 3,000. It has to be included in cost to sell. Legal fees of rupees 5,000 is to be included, and documenting stamp tax is to be included. Reorganization cost and termination benefits are not to be included in cost to sell. Value in use. Value in use is net discount cash flows and discount rate, cash inflows minus cash outflows. Exclude finance costs, restructuring costs, and tax revenue or payments. Example, on December 22, RG Limited is evaluating one of its segments for impairment testing. On the balance sheet date, the carrying amount of the net assets of the segment is 25 million. Also, there is no active market for the segment in relation to value in use. There are two computations. INR 20 million, this excludes the restructuring cost. INR 29 million, this includes the restructuring cost. Example answer, carrying value is 25 million, recoverable amount is 20 million, impairment loss is 5 million. Example, RG Limited purchases a PPE for 2 lakhs, residual value 5,000, useful life 8 years, used for 3 years. After 3 years, the following are the cash flows. Fair value less cost to sell 1 lakh, cash flows 20,000, present value factor 0.869, 30,000 present value factor 0.756, Y3 30,000 present value factor 0.658, and Y4 40,000 present value factor 0.572, Y5 20,000 present value factor 0.497, and Y5 there would be additional cash flow, which is the residual value of rupees 5,000, 5,000 into 497. The total of present value of cash flows is 95,105. So recoverable value would be higher of fair value less cost to sell or value in use, which is 1 lakh. Answer, depreciation is 2 lakh minus 5,000 divided by 8 into 3. 73,125. Carrying value 2 lakh minus 73,125. That is 126,875. Recoverable value is 1 lakh as stated earlier. And impairment loss would be 26,875. Example, carrying value is 1000, provision for site restoration is 500, value in use is 1200, fair value less cost to sell is 800. Answer, uh, carrying value is 1000 minus provision for site restoration 500, carrying value is 500, and value in use, recoverable value is higher of value in use 1200, of fair value less cost to sell 800. So 1200 is the recoverable value. 1200 value in use minus 500 provision for site restoration, that is 700. 700 or uh, or uh, or 800 fair value less cost to sell. So 800 would be the recoverable value, and carrying value is 500, hence there will be no impairment loss. Important note: in computation of recoverable value, the asset retirement obligation is to be reduced from carrying value and value in use. uh, Recognition of impairment loss, revaluation reserve, revaluation reserve account debit, P&L account debit to asset account. No revaluation reserve, P&L account debit to asset account. Goodwill account debit, if the goodwill is there, then P&L account debit to goodwill. An impairment loss that relates to an asset that has to be revalued should be recognized in OCI, P&L, recognized in OCI to the extent of revaluation reserve and balanced to the P&L. An impairment loss is recognized in the OCI to the extent of revaluation reserve and balanced to the P&L. RG Limited purchased an equipment for 51 lakhs on 1st April 19. Useful life is 5 years. Residual value is 1 lakhs. On 31st March 20, a test of impairment is done, and the fair value less cost to sell is 36 lakhs, and the value in use is 32 lakhs. Calculate the impairment loss. Uh, on 31st December 20 and the depreciation as on 31st March 21. Uh, Answer is 4 and 8 lakhs, 5 and 10 lakhs, 4 and 9 lakhs, 5 and 9 lakhs. Answer: depreciation 51 minus 1 divided by 5, 10 lakhs. Carrying value 51 minus 10, 41 lakhs. Recoverable value 36 lakhs. Impairment loss 36 lakhs. How did we get 36 lakhs? Fair value less cost to sell is 36 lakhs and value in use is 32 lakhs. Higher of the two is 36 lakhs and carrying value is 41 lakhs and recoverable value is 36 lakhs. Hence 5 lakhs is the impairment loss. And depreciation for the future year is 36 lakhs divided by 4, that is 9 lakhs. So 5 and 9 lakhs is the answer. Entity: RG acquires entity R for 50 million, of which 35 million is the fair value of the assets acquired and liabilities. Compute goodwill. There is corporate office which is not included in the above to the tune of 10 million. CGU 1, CGU 2 total. Net assets 25 million CGU1, 10 million CGU2, total is 35 million. Corporate office is the 10 million. So 10 million into 25 divided by 35 7 and 10 million into 10 divided by 35 3. Uh, this allocates the 10 million. Fair value of assets 50 into 25 divided by 35 35 million. 50 into 10 divided by 35 15 million. Total is 50 million. uh, Goodwill or bargain purchase uh, 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 25 minus 7 minus 25 plus 7 that is 32. Fair value of assets 35 minus 32, 3 is the goodwill. 10 plus 3 13. Fair value of assets 15, 2 is the goodwill. So total goodwill is 5. Impairment, if there is an impairment loss of 5 in CGU1 and impairment loss of 5 in CGU2, then impairment loss 5 to goodwill 3 to P&L, to impairment loss 5 to goodwill 2 and to P&L 3. Reversal of impairment loss. The impairment loss reversal cannot be increased above the lower of the amount, recoverable amount, or carrying value in case no impairment loss has been recognized in the prior period. So, example 26,875 is the impairment loss earlier, and now the favorable situation reversal of impairment loss to the tune of 50,000, and recoverable amount is 30,000. Lower carrying a value in case no impairment loss is recognized is 25,000, and hence reversal of impairment loss can be lower of the two, 25,000, or recoverable value 30,000, which is hence the reversal of impairment loss can be done till 25,000. Disclosure in PPE Intangible asset. For each class of asset, the amount of impairment loss recognized in profit or loss or OCI, the amount of reversal of impairment losses recognized in P&L or OCI, disclosure in segment reporting. For each reportable segment, the amount of impairment losses recognized in P&L or OCI, the amount of reversals of impairment losses recognized in or OCI. This brings us to an end of the session. Please do like, subscribe the channel. Thank you so much.